Essentially, a SPAC is an abbreviation for Special Purpose Acquisition Company. It's a shell company which is usually organized or sponsored by somebody experienced in financial deal-making and the inner workings of Wall Street. And these sponsors pay the underwriting and legal fees to take these shell companies public. And they raise hundreds of millions, sometimes billions of dollars in rare cases. But they usually have the right to buy shares of the companies at a deep discount. And then the SPAC finds a private company that's looking to go public to merge with. So once they find a company, they merge with it, and then that whatever startup that is gets to be traded on the public markets. In 2020, there were 248 SPAC IPOs, according to a research group called SPAC Insider, and they generated $83 billion in gross proceeds. And those numbers have already been exceeded in 2021 too. The last time I looked, there were over 300 SPAC IPOs already this year, with more than $100 billion generated. They're really a win-win for both sides. The sponsors that put these blank check companies, these shell companies together, get stakes in the companies at really deep discounts and usually get a nice chunk of the companies they merge with. So it's usually an easy win for them. And the founders of the companies that are going public, these startups that merge with the SPACs, can skip over a lot of the red tape and regulatory requirements that a traditional IPO would require. So they can usually make a lot of money too, and get a more liquid payout for their investment and their time. And hedge funds usually make almost a guaranteed profit when they invest early on. And the only losers a lot of the time are the retail investors, the everyday investors who get swept up in the craze with none of those built-in advantages. And they can get left holding the bag at the end a lot of the time if the stock goes down. Number one on our SPAC Billionaires list is Matt Ishbia, the CEO of United Wholesale Mortgage, which is a mortgage lending business based in Michigan. It's the second largest mortgage lender in America behind Rocket Mortgage. So Ishbia's net worth was $9.7 billion as of when we published the list a few weeks ago. He's had an interesting life. He walked onto the basketball team at Michigan State, won a national championship there in 2000. After he graduated from there, he joined his dad's small mortgage business. And that business really took off during the Great Recession, and he bought out his dad with his older brother, Justin. And so that company, UWM, went public in January through a merger with a SPAC sponsored by private equity billionaire Alec Gores. And the stock has performed okay since then. He's the largest shareholder of the company now, so his stake's worth $9 billion, more than that. Chamath Palihapitiya is a prolific sponsor of SPACs. He's a former executive at Facebook, venture capitalist now, very outspoken on Twitter, more than 1 million Twitter followers, tweets a lot about Bitcoin or GameStop or whatever the flavor of the day is. He's sponsored SPACs that merged with startups like Virgin Galactic, Open Door, Clover Health to help make him a billionaire. Still has a couple shell companies in the market that are still looking for companies to acquire and take public. Separately, Austin Russell is just 26 years old, the youngest self-made billionaire in the world. Dropped out of Stanford in 2012 after receiving a Thiel Fellowship for $100,000 to start his company called Luminar Technologies, which makes laser sensors for self-driving cars. And that went public in a SPAC merger in December. He's worth $2.5 billion now, Russell is, after taking that public at just 26 years old. First, the story was only about new billionaires that have become billionaires thanks to SPACs that debuted on the list. But they really made a lot of existing billionaires a lot richer in the last year too. Alec Gores, who was a private equity executive, he's sponsored a lot of SPACs, including the deal for Matt Ishbia's United Wholesale Mortgage, and his net worth was $2 billion last year, and this year it's $3 billion. So that growth is almost all due to SPACs that have helped him get another $1 billion richer. And since we published the list and published this story, just in the last few weeks, SPAC activity has really slowed down in April after almost, a year and a half of a steady flow of, accelerating deals. Because the SEC issued new guidance that would classify these SPAC warrants, which are similar to options to buy shares, as liabilities instead of equity. So that would force companies to recalculate their financials and growth projections. So that's just started in the last few weeks, and it's really put the future of this after, a year and a half almost of hundreds of SPAC IPOs is really in question moving forward.